Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to look at Bitcoin and the different altcoins. This is Bitcoin has been pulling back, and the altcoins have been pulling back as well, and they've been in a strong downtrend right now, riding EMA4 resistance lower on the daily chart. And when the trading programs are set for that level to be resistance, the best thing to do is to be on the sidelines if you're a long trader. If it's a long-term investment, if you're not willing to ride it all the way down to who knows how low, the best thing to do is to not hold when there's candles forming below EMA4 on the daily chart. It doesn't matter if it's a stock, if it's a commodity, or if it's a cryptocurrency. It doesn't matter what it is. If it's forming candles below EMA4 on the daily chart, it is a risk to hold long. And so just keep that in mind. I know Bitcoin is a long-term investment, and a lot of people don't trade it, but for the traders out there, it's been a bloodbath. It's been trying to bounce. So this is the Bitcoin Coinbase chart, and as you can see here, the pink line here is EMA4, and it's been riding that level lower. It got above that level back here on the 20th, but it failed to get above the orange line. That's EMA13. That has been the top of the recent bounces, and so right now you can see it's pushing down really low. It broke below this key support level, which was the closing price on April 3rd, and so that close below on the 26th did signal more downside risk. Now it's hitting support from over here on the 2nd of April. You've got these candles here that were forming a tight channel, and so it's headed for that level, which would be 70-70. That zone. If it fails to hold the 70 to 70 zone, you could see it drop down there to the 6600. That's the big level to hold right now. Is this recent low close on the 6th of April? Okay, that looks like where it's headed. You want to see a technical bounce off of this zone here. If it were to drop below that 6600 support zone, that would signal more downside risk. Right now, Bitcoin is trading below all of the moving averages. It's trading below the 50, the 100, the 200, and the 300-day simple moving averages, riding EMAs 4, 8, and 13, resistance lower. The bears have been in control since the chart broke down up here on the 7th of May. It had that nice bounce, topped out at this 9,900 level. What happened was, people were talking about the 10,000 level. It wasn't just that it wasn't able to get above 10,000, but it failed to get above the 200-day simple moving average as well. So that 10,000 level was the big barrier, and then it didn't get above the 200-day simple moving average, and then now dropping back below, it is signaling more downside risk. Now let's take a look at Bitcoin Cash. You can see here Bitcoin Cash has been just falling off of a cliff here, heading straight down. It bounced right here and hit EMA 13, the orange line, failed to stay above, got below the 50 and 100-day simple moving averages, and now it has no more support below. It's trading above below all the moving averages, all the support levels, and then it's headed for this key level, which is the close on this candle, and the close on this candle, which is at 908. And so you want to see a technical bounce off of 908. The reason why is because it could drop all the way down here to 780. That's really the next support zone. These are two big candles. So this 893 level, basically what you're this 890 to 910 level is going to be huge, because if it breaks, you could see a drop all the way down to 780. Now it's not going to be starting to bounce until it gets above EMA4. You can see it got above one day and then closed right back below. Every single one of these candles is below the pink line. It's great if you're long and they're riding above the pink line, stay long. But when they go below, get short, like Bill Gates, right? Because Bill said that he would short all these, and so it's just been falling off a cliff since he said that. And so what happens is, if 780 fails to hold, you could see a drop down here to 607. That's the low close on the 6th of April. So that's where this could be headed if one of those support levels fail to hold. If you look here at Bitcoin Gold, now this is interesting. It's coming way down. Look at the sad fall for Bitcoin Gold. It was all the way up here at $400, right? When it peaked out, that was the high close up here at $400, and then it failed to make a higher high. It kept making lower highs, and then finally it dropped off a cliff, and so it came down and then bounced. And so it started trading way back here on November the 24th, and it had a close down here around 104 when it first started trading, and so now it went from 400 for a high close. Now it's at $40. Now it's all the way down here at 41. Look at the low close. The all-time low close for Bitcoin Gold is $39. It's getting ready to test the all-time lows. So this is, I mean, look at that. So people are not buying Bitcoin Gold. Obviously they're not believing in this currency because it's losing value in a very fast rate. And so check out the implications. If this 39 level fails to hold, there's no support below. I mean, just like how you have the blue sky breakout to the upside, if you have I don't know what it's called when you're breaking down to new lows, maybe the black hole drop or something, because once you get below that all-time low close and then there's no more trading below that, look how there's no trading below that level, there's no more support. There'll be nothing supporting this technically once it drops below, gets below this low close here at 39. Actually, there's one more. The all-time low is right here. Down here on the bottom, the lower wick on this candle, and so 38. So this 38 to 39 level, look for a technical bounce off this level. This is where if it's gonna bounce, it should bounce off this level. The all-time lows. It may be making a double bottom off this level. It's never good though when a stock tries to bounce or a cryptocurrency or whatever you're charting, and then it retraces the full length of the bounce, because the 100% retrace is putting it for more of a drop. I mean, you could see up here when it had a bounce here, and then it fully retraced to the start of the bounce. When this candle broke below, it really got going, to the downside. And so that's what could happen here. If this 39.38 holds, they could take it to the next level. Where is the next level? We don't know, because it's never been trading below those levels. Okay, let's look at Ethereum. So Ethereum's getting just crushed. I mean, you could see it's down 8.5%, and it's well off the lows. It was down much greater than this. So you can see the green line here, that represents where it bounced. It bounced off this candle here on the 12th. It's hitting the $500 support zone. You could see all these candles here was in this 500 level. It was resistance, then it turned into support, and then it really took off to that next level. And so it's going to be real important that it stays between, stays above that $490 to $500 level. If it does drop below 490, the downside risk is it comes down here and tests that 450 zone. You can see that was the close here, and so there's going to be a little bit of support right there. But then it could come all the way down here to 412 and hit support down here. And that was the top of this channel down here, I guess 415, and then the low is 369. And so as you can see here, it was trying to hold up. This was doing much better than the other cryptocurrencies. It had been holding up well. It was still above the 200-day simple moving average and the 100 and the 50, just on the 21st of May. It was holding support while others were bouncing. But when that 200-day simple moving average and 100-day simple moving average, the gold and red lines broke on the 22nd, that signaled downside risk. And immediately the next day, the 50-day simple moving average broke. And then today, really, really bad news for Ethereum bulls is the blue line broke. What is the blue line? That's the 300-day simple moving average. That's the last line of defense here. Now you're just going to have horizontal support, and then it could, retrace to lower levels. We'll see. Look at the implications of this, the recent low here, down here, that 370 level. You can see that's the, where it broke out higher. That was that recent top, or the top from back here in the 400s. So yeah, so this, the downside risk is that, it goes down and retests that 370 level. If it fails to, if that 300-day simple moving average remains resistance and it keeps riding EMA for resistance lower, you could get a full retrace. I mean, that's the downside risk. Look at Litecoin here. So Litecoin is in this, I guess, a falling wedge pattern. You have descending resistance okay, and then you have descending support, and so it was working its way in this pattern, and it broke above the descending resistance for a bit, and it looked like it was going to head higher back here in May. It was getting above key resistance levels, but then it dropped back below, and you could see they pulled it all the way back down, and so now it's hitting this key horizontal support level from April, this March-April support zone at 112, 113. If that level breaks, that's going to signal more downside risk. You could see a drop down here to 103. That's the top of the candles over here from back here in December, and so it's going to really need to bounce off of that 103 level if 113 fails to hold, because then it could just keep retracing lower. It's currently below all the moving averages. It's below the 50 is the green line, the gold line is the 100, the red line is the 200, and the blue line is the 300-day simple moving averages. Those are all the big dogs. Those are the big ones to stay above. Look when over here on the left in November, when the candles were above all these lines, the chart was super strong, and now that it's below, that could signal that it's going to be super bearish, and you could see a bigger drop. And so, yeah, so Litecoin, okay, what does it need to do? I know I should have said that with Ethereum. The bottom line is all these bounces are going to begin with the break above EMA 4, and then they have to get above EMA 8. They're going to have to get, if you see that EMA 4 and EMA 8 break, notice how they got above that, and each time they're hitting the orange line, it's going to come down to on a bounce, getting above EMA 13. Now, if you see EMA 13 turn into support, then it could possibly get that reversal going. Look over here, the last time it bounced, see how it kept hitting it fell off, and then it hit the orange line, hit the orange line, hit the orange line, each time failing to close above, and then right here it closed above the orange line, and then that signal that was ready to head higher. So what happens is you can play the bounces, right? So it's down here at 113, and so what people do is they try to load off the low, and then they play the bounce, and then if it runs up to EMA 13 and that level fails to break, they lock in profits. It's called a short cover rally. And so stocks that or cryptocurrencies or commodities or whatever you're charting is heading lower. If they're in a downtrend and they bounce and they fail to break that resistance and keep heading higher, it's just a short cover rally, and the downtrend usually continues. Okay, so let's look at XRP. This is Ripple. So Ripple, has this a strong downtrend right now. It's heading below EMA's 4 and 8 resistance. It's traveling lower below EMA 4. It broke below the 300-day simple moving average. That's the blue line right here on the 23rd, and so that's currently at 64 cents. It needs to get back above 64 for all these cryptocurrencies that drop below the 300-day simple moving average. That's the big one. They need to stay above that level for the chart to remain bullish. It's the last line of defense for the bulls, and so if it turns into resistance, it really changes the technical dynamics of the chart. It really turns the chart bearish if that turns into resistance. If all these moving averages above turn into resistance, it's going to be a major red flag. What it signals is that there could be more of a sustained downtrend. Okay, so it was breaking out and it failed. It was currently above all the moving averages here, and it failed and pulled back. And so what it's headed for now is that low close down here at 47. And so 47 is going to be the big level. If it can come down there and bounce off 47, that would be sweet. Now it could bounce before then. You've got the high close here on the 3rd of April, and so that's right here at 54.55 cents here. And so look for a bounce off that 54.55 support zone. If it breaks, 47 is going to be on deck. That's going to be the big level to hold. You can see here on the chart why 47 is so important, because it was the bottom level. When it had the big breakout, that's where it found support. And so if this candle failed to hold at 42, I mean that's the scary thing about this chart, is that this was such a parabolic move right here that if support breaks, there's nothing holding it up. If it goes below 42.5, you could see a drop all the way down here to 28 cents. And that would be painful for people because people are now putting in like real money into these cryptocurrencies. Like these are trading like penny stocks, like over-the-counter penny stocks, and most times when people trade over-the-counter penny stocks, they're not trading with a lot of money. They're not betting the whole house on it, and they're it's more concern. People are working with smaller amounts of money, but people have dumped big money into these cryptocurrencies, and so it's a big haircut. cut, you know what I mean? Going from 57 cents down to 28, you know what I mean? So be careful out there. If it doesn't bounce off of 55, you could see a drop down to 28. Let's look at Tron. Okay, this is TRX, BTC. This is the whole history of the trading. You can see this started trading back here in January, and so it hasn't been trading for very long. You know, it had that nice, it got the nice run going, and then now it's pulling back. You know, this was holding up much better than the other cryptocurrencies. You can see even just on the 26th, it was pushing. You know, just a couple days ago, it was pushing nicely. What happened was it failed to make a higher high. So you can see here it made a high on the 1st of May, came down, hit support, and then it came back up and it made a lower high. Check out the descending resistance. So it's always a red flag when something fails to make a higher high. You know, if a cryptocurrency doesn't make that higher high, it's signaling to you that it could pull back, and that's what's happening today. Now you're getting a sharp pullback, and so where it's headed for is this key support zone. It's the low close here on the 11th of May, and then this green line, which is the 50 simple moving average. It's basically got to hold that 7.7 level. All right, so 7.7 is going to be the big one, and so yeah, if it drops below 8.5, that's going to be the top of these candles. You're going to see that 7.7 tested, and then 7.7 breaks. That's where it could get really hairball. It could really pull back because you have it could drop down to 6.5. Because you have that's the next key support, and then you have the 100 simple moving average way down here in the 6.2 level. So yeah, we'll see if it can bounce. Now, if it can bounce and get back above the moving averages, that would be great. The thing is today is the first day that it's breaking below EMA's 4, 8, and 13, and so just keep that in mind that your first loss is your best loss. Meaning that you know, this is the first day that resistance is breaking or support is breaking, and if it gets a prolonged downtrend going like all the other cryptocurrencies, today would be the best day to be able to get out, because you're only going to incur more downside risk if the chart does break down. You know, I'm just throwing that out there. That's all just technical, just how the charts work, and just you know what I mean. Everybody is on their own and trade, you know, at your own risk. I'm just throwing out ideas. If you look here, you've got the sideways action going. I wanted to show you this chart because this is the entire history of SALT BTC. It broke above the channel, you know, it ran up to the highs, and then it came back down, and you know, it's back in this channel from where it started, and right now it's testing the bottom of the channel. It's right now it's breaking to new all-time lows. So I wanted to show you this chart. I know it's difficult to read, just so you could see what's happening, and so now you can see where it's breaking down. You can see this was the low close right here, and it dropped below that level on the 23rd, and you can see now it's dropping off a cliff. This is all-time new lows for this. So SALT was supposed to be awesome, and they talked it up so big. I remember in December when it was running up and it had their thing, and then everybody was saying it was going to be this great platform, and I mean, look at it. It's just getting just devastated. So yes, I feel bad for everybody that's been holding on to this. But yeah, this is not a pretty picture. When you break below all-time low support, it signals more downside risk. This is the black hole drop. You know what I mean? If we've got the blue sky breakout to the upside, you know, if you're falling down a black hole here, because there's no support. It's never traded at these levels. You know, this is all-time low levels. You can see the all-time low is the bottom right here. And it broke that level today. 264 was the all-time low. You know, this is where, if it's going to bounce, okay, I don't want to get too doom and gloom. It's down 4 days in a row, and this is where it could bounce. You know, so anybody that's holding on to this is where you want to see a technical bounce. This is where it's got to happen. If it doesn't happen here, then it could fall lower. Okay, it's not going to get a reversal until it turns EMA's 4, 8, and 13 into support. Okay, let's look at ADA here. Big drop. You know, just heading down. It dropping hard today. It broke below support from over here in April, and then now it's coming down to this key support zone. You can see how it topped out here multiple times before it broke out higher. So this 2.4 level is going to be really big. So look for a technical bounce off of 2.4. It should be able to hold this. Look how all these candles hit this 2.4 level, and then when it finally broke above, that's when it headed higher. So this is a major, major, major support zone. If you see this green line break, 2.384, you know, the 2.4 zone, break and turn into resistance, that's going to be a major red flag. That's going to bring it back into this zone here, and then it could end up working its way all the way down to 1876. They have a very strong downtrend going right now. You can see they're just driving it down every day, and so unless buyers step up and turn it around, you can see they're taking this down on super light volume. There's just there's no buyers, like people are not stepping in. You can see people caught the falling knife right here, trying to time the bounce on this green candle, and now it's much lower. And so you have to be very, very careful trying to catch a falling knife, because it totally hurts, right? And so sometimes it's best just to wait for the break above resistance. You can get shook out. You can see here when it got above EMA's 4, 8, and 13, it failed to stay above and pulled back. Got above it, rode higher, pulled back, and then got above, and then it finally broke out higher. So you can get shook out, but the chart is not going to reverse until it gets above this 100-day simple moving average and EMA 13 up here in the 2.8 level. Okay, let's look at XEM. All right, so this one is pulling back as well. It's hitting, I believe this is the all-time, no, it's not all-time low levels, so that's good. It's trying to hold support here. That you can see this is a major support zone. You can see there was a lot of trading in this zone over here, and then in February and in March and April, this was the key support level. So it looks to me like this is the big one to hold down here at 32. 3209, and so if it were to break below 3209, then it could fall to the next level. You could see it come down here and test this 23 zone, which is this whole trading range, down here at 21. 23 to 21 will be really big to hold below 32. If they break, then you could see a drop much lower. Okay, so you can see right here, there's got the 21 level, and then if it were to break, the downside risk is it comes all the way down here, to 12.6. Or yeah, I mean, to me, these just seem like freaking risky as heck, freaking over-the-counter stocks. And the SEC keeps coming out and saying that not a single ICO so far has been a currency, and they've all been equities as far as they're concerned. And so yeah, they're trading like penny stock pump and dumps. None of these charts look good. They all look really, really bad. You know what I mean? I know people are in love with this stuff, but man, follow the charts. Follow the chart, not the heart. You know what I mean? These could all be great ideas, but if they're headed in, unless you're short, you know what I mean? People that are short are making money right now, and that's great. There's two sides to the market. But if you're long, you got to be careful trying to catch a falling knife here. I would wait until, what you want to see is volume. It's not just about breaking resistance, but you need to see a commitment of volume coming in with the break above resistance, signaling, okay, this is finally the bottom. Because until then, who knows how low these could go? They could go much, much lower. I mean, I remember when Bitcoin was at $12, and so look at it, so just keep that in mind. These could drop much lower. Now look at XLM.BTC. This has been, got nailed at the open when it first started trading. It bounced, and then I wanted to show you this one because now it's at a new all-time low. Not all-time low, it's going for a new all-time low close, because we're always going by the closes, and you can see the bottom of this candle is the all-time low close on the 23rd, and so what now the next support is the all-time low down here around this 346 level, and so that it's headed for this zone here, and so if it were to break, then it could just keep sinking lower because there's no support. Once again, look where it hit, the orange line. That's why we trade. That's why it's important to trade technically, because I mean, if you read anything about any of the trading firms, everybody's getting fired. It's all going to computer algorithmic trading programs. And what do the programs do? They follow the moving averages. The programs all follow the charts. They're following all the data. It's all technical now. Okay, so until it gets above EMA 13, I would not touch this. Do not. It's deadly. If it closes above EMA 13 and it turns into support, then you might get a nice bounce going. Until then, I think the best thing to do would be to avoid. All right. So yeah, Bitcoin coming down. I mean, I said in the last video this was headed for 6,000, and it's on deck. It's coming up close. And yeah, if this gets below, you can see here. at the old. Let's see, this is another one. But yeah, Bitcoin has more downside risk coming if it fails to hold support. This is going to be a big one. It has to hold the 6,600 level. If 6,600 fail to hold, then it could really drop much lower. You can see down here, you've got the low close down here from the November the 12th. Okay, and so that's right here at like 5873. So that's the downside risk. All right, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. I'll post the link below the video. Thank you.